If you were doing the parts supplies for GM and you went on strike, GM was screwed too. So if you wanted a pay rise, yeah, you had power to get it.
If the Fed chairman was to start to reduce interest rates, do you think like the tech sector could recover?
Look, I hate to break it to everyone, but interest rates aren't even high.
That's right.
Like, they're really not. They're only high in reflection to a weird period where they were zero. Interest rates are actually today where they were in 2006. Nobody remembers that. They were higher in 2001 when we had a boom time before we had a bust, right? Most of the inflationary period, they've been negative in real terms. That is, the inflation rate's been higher than the interest rate. So, and they didn't even bring down inflation. This is a much longer conversation, but no. Here's a simple way to think about it that a guy called Mark Herman Schwartz has written about, and I think it's very compelling. Back in the good old days, we had vertically integrated firms that were sector specific, that basically had similar industrial structures to everybody else in a different sector. So as Tom Oatley put it, 1 in 5 jobs in 1971 were in autos. 1 in 3 were in all the other feeder industries. We're all part of one big vertically integrated coalition. And what that meant was the workers in those firms had hold-up power. If you were doing the parts supplies for GM and you went on strike, GM was screwed too. So if you wanted a pay rise, yeah, you had power to get it. Then what happened was, apart from all the neoliberal stuff, right, is basically we were able to change the structure of the firm. And what happened was those vertically integrated things basically stripped off into firms that did nothing but intellectual property, high-end design, etc. Think of all your big 7 tech firms, right? They have moats and castles. They protect themselves through IP. They have ecosystems that are rival. If you're on Apple, you're never going to use PC, all this sort of stuff. And then they basically charge you subscriptions and make rents off it. They hardly employ anyone in terms of the overall labour market, but they make a tremendous amount of money for shareholders and the insiders in those firms. Then, stick with Apple as an example. You've got the people that actually make their hardware. Think Gorilla Glass and Corning Glass. They still employ a lot of people, relatively speaking. They pay pretty good wages. But what's their constraint on investment? Their constraint is what Apple's budget is. And Apple sources globally and sells globally and assembles globally. They're not tied into the American labour market to any real extent. Now, move from Corning Glass to the rest of the economy, the 80% of firms that basically make barely any profit. They kind of run on a franchise model. Let's say you go hotels, right? You go to Hilton, you borrow the brand for a fee. You put together some investors, you buy or you rent some buildings. You then bring in someone who turns them into hotel rooms. Then you hire somebody to do the staffing. Then you hire 10 different companies to do the cleaning, the cooking, etc. And every single one of them is on the lowest bidder, and the profit model is to take it out of labour. So you end up with an industrial structure where nobody has striking power, apart from 1 or 2 tiny sectors like autos still, and that's still dubious, where basically all the rents flow straight to the top and the profit model for the bottom is essentially squeeze labour. And that's the world that we built. So, if you're actually, somebody who owns one of these top firms, or you bought Apple shares back in the day, well, good for you. But has it been good for everybody else? Nah, not really.
Moreover, if I may add, the other thing that's gone on is that the extraordinary amount of wealth that's been generated for the wealthy, even if they paid the taxes that were on the books, they would be paying a lot less taxes than they would have 20, 30, 40 years ago. But then you add, especially in the American case, the incredible number of specific loopholes so that people like Musk essentially pay no taxes at all because they don't have any income.
Mm-hmm. Can I tell you one of the favourite scams for that? Loan income isn't actually taxed. Why is it that like Elon wants to be paid in stock? You take your stock and pledge it as an asset against a loan. You reckon that those stocks are going to increase in value, so the net present value of your loan is higher than what you'll pay back, right? So as the stock goes up, the collateral value goes up, so the value of the loan you're paying back in real terms actually goes down. You then have loan income to spend as income, but it's not actually income, so you don't pay any taxes on it. This is brilliant. Just don't pay any taxes.
Yeah. There are so many loopholes, I feel like.
Loopholes is the wrong way to think about it. Loopholes implies that basically a team of accountants have been drilling holes in things, right? There's a little bit of that. We fundamentally tax income from capital and income from labour in totally different ways. And it's just become, over time, more and more apparent that that is the case. And capital pays no taxes, but they have most of the money.
It used to be the case that capital income was taxed at a higher rate than earned income. Now, earned income is taxed at a higher rate, and capital income is essentially not taxed at all. So, if you are somebody that has significant resources, what do you want? You want all of your income to be in the term of debt income or capital gains income, and all of those, by the way, going back to the point about how the wealthy are repeating themselves, that wealth, when it's passed on to another generation, is not taxed at all.